Hey YouTube, this is Zach with Achilles Financial, and today I want to talk about GrowGeneration Corp, which trades under the NASDAQ ticker symbol GRWG. So this is one that I mentioned yesterday in our Discord, which is in the description below, as they announced earnings yesterday after hours, and they'll be holding their conference call this morning. So I'll place a link to any of those results in the description after that happens. So this is pre-market, so we may see some additional changes. But I want to talk about this company because in the marijuana industry, there are a lot of companies that have seen huge run-ups. In particular, I'm thinking of AFA, Tilray, ACB, Aurora Cannabis. The reason that these companies have just launched skywards is because of the looming potential that additional marijuana approaches, such as recreational, will be legalized here in the United States. Because of that, there's been a lot of speculation that these companies are going to do very, very well. Now, my approach to the marijuana industry has been to look for the pick and shovels play. That reference being to the gold mining industry back in the 1800s, where again, there were a lot of people who went in search of gold and never made any money. However, the people who did make money and were profitable were the ones who sold the picks and the shovels. And I think that that's where GrowGeneration has its market down pat. The reason for that is because GrowGeneration is essentially compared to Home Depot, to Lowe's. They service a lot of the items that are utilized for growing marijuana. Now, that being said, let's actually take a look at their site so you can see what I'm referencing. So you can see I now have their website up. I can link this down in the description below. This is once again a company that is essentially able to provide a lot of the greenhouse type of capabilities, a lot of the potting soils, the fertilizers, the lights that you would utilize to be able to grow pot or pot related products. So again, you can see a lot of this information here. They are actively acquisitive. The reason why I highlight that is because something that I've mentioned in the past regarding marijuana stocks is it is a very, very saturated market, and you have to look for the winners because there is going to be a lot of losers in this type of field. Think tech in the year 2000. Again, there were a lot of entrants into the field. You needed to make sure you were getting a Google and not a Yahoo. Because again, depending on who you invested in, you'd be very wealthy right now, or you would have lost money over 20 years. And I think that's important to note, is that everyone always says that from a risk mitigation standpoint, in particular in the stock market, that the longer you hold a stock, the less risky it becomes. And I would highlight that if you are holding winners, that is true, but not every risky stock is a winner. So let's talk about why I think GrowG is a winner. So let's go back to their fundamentals. So now that we've got their fundamentals up in front of us, keep in mind the valuation ratios that you see here are not reflective of their updated earnings. The reason that I highlight that is because these are very high PE ratios, very high price to sales ratios. However, these numbers are about to get a little bit better. Plus, again, I still think there's additional potential in the actual stock, despite the fact we've seen a massive run-up. So let's look at the income statement reflective of the annual numbers. And the reason why I highlight annual is because I want to show you this before I show you the 2020 results. So last year in 2019, the company actually brought in right at, we'll call it 80 million in total revenue. You can see that reflected here in 2019, and you can see that it also that went straight to the bottom line for the first time since 2018. To put this in perspective, or to use more broad terms, they are cash flow positive. I always talk about, I like to invest in companies that make money. I can go out and lose money myself. The reason why I'm giving my money to these companies or investing in these companies is because I want them to actively go make money. And you can see that down here below where the net income, you can see they were actually positive by nearly $2 million. This was the first time ever. That being said, if you go into the quarterly view, you can see that that trend actually continued. So this is again Q1, Q2, Q3, and they announced the Q4 and year-end results for 2020 as of this morning. So you can see that in Q2 and Q3, the revenue was actually combined higher than what we saw in the entirety of 2019. Now, spoiler alert, they made $180 million in total revenue, which, as you just saw, is more than 100% increase year over year. However, that's not just stopping them there. You can see down here before net income that they were actually $2.5 and $3.3 million in the positive. They actually had an acquisition, is why we saw in Q2, or rather Q1 2020, that they actually were net negative on the net income. So this is a company that's seen 8 acquisitions over the past 18 months. And I think that that's a trend that is going to continue as they continue to expand their retail presence as well as their e-commerce platform. So let's actually take a look at some of those full year results. So this is coming straight off TD Ameritrade. I've just gone to the news. This is coming from PR Newswire. I want to highlight that they had a record revenues of $193 million. The reason why that's important is because this is more than double what it was in 2019. So not only is this company gaining ground and gaining market share, but they're pulling in that revenue and actually making a profit of it. So adjusted EBITDA of $19.2 million and pre-tax net income of $8.6 million. This is awesome numbers, awesome growth, and this is what I'm looking for from this industry. Again, they are not actively the sellers of marijuana, but rather they are the enablers of the selling of marijuana. As you can see, they've actually gone from having a potential or a revenue of $193 million, which is record, to saying in 2021 they are anticipating $415 to $430 million, which is again more than double what they just saw. The 2021 full year expected EBITDA is up to $48 to $51 million. This is excellent, and again, I'm very bullish on the overall company because again, you're not selling something that is based on, hey, we have to have legalization for them to do well, but rather they have the capability to continue to grow even if that profitability doesn't materialize for these other companies. As you can see, their first quarter 2021 revenue guidance is expected to be the entirety of what they sold in 2019. And they're expected, again, profitability. So what we're looking at here, the potential for this company's growth is coming from the fact that as states continue to legalize, you're going to see more and more producers. That being said, there are already a lot of producers that are expanding into the United States, despite the fact that it hasn't been legalized in a number of these areas. So as we go through the process, as the company continues to grow, I think it provides a lot of potential for A, the cash flow positive nature of the company, but B, from a valuation perspective. I think right now the price to earnings ratio is a little too high in my opinion. Admittedly, the stock has dropped down a little bit. So what I'd like to see is as earnings increase, that this number kind of falls flat for a little bit, and so we can have the earnings catch up to the current price of the stock, and the price to sales, as that continues to drop a little bit lower, will feel a little bit more comfortable. I don't believe that this is representative of the earnings that were mentioned today, so I'd like to see this kind of drop a little bit lower. Admittedly, you can see that from an industry perspective, the industry has a price to sales ratio significantly higher than GrowG. The big thing I want to note, though, is that in the marijuana stocks, that they are remarkably profitable. Admittedly, we don't compare them to the marijuana industry, but rather to specialty retail. However, again, their gross profit is showing that out of every dollar that comes in, they're making a profit on right at 26.56 of that. Admittedly, the net profit is significantly lower. The last thing I want to highlight, one of the reasons I am very bullish on this company, is their financial strength. They have little to no debt. You can see right here the total debt is very low, and the quick ratio of current assets over current liabilities is a little higher than the industry, but they are still on the front end of this. So they have low debt despite the fact they're very acquisitive, and that generally means that they're not looking to dilute the stock to go out and purchase these companies in stock deals, but rather what they're doing is they're generally speaking paying cash. All of this lends itself very well to potential future growth in the industry, as well as potential future growth on the balance sheet, which is really what I'm looking at. So all that being said, this is something that I think from the current pricing, so closing price of $45.81, they're already up close to $50 this morning. What I want to highlight is this company has a lot of potential going forward. The reason being that, again, they had strong earnings this morning. They're still up to $50 a share. I still think that's a good buy point. Admittedly, the broader market could bring this down. This is a long-term hold, and I think that this has a little bit less speculation surrounding it than what you've seen from some of the other marijuana stocks. To reiterate, I'm looking to buy the pick and shovel play, not looking to buy the speculative quote-unquote gold play. So let me know in the comments below your thoughts on this company, or if you'd want to talk more about it, feel free to check it out in the Discord. So last but not least, if you found this content helpful, please leave a like and subscribe.